Hello and welcome to Insurance Mantra, your weekly guide to the world of insurance only on ET Now. In today's Leadership Insight, we discuss the future of India's life insurance industry from increasing insurance penetration and strengthening distribution to the next phase of growth. So on the show, we'll discuss, can India significantly increase life insurance penetration in the coming decade? What is the biggest challenge in rural life insurance? Its awareness, affordability, or accessibility? How should commission structure balance customer interest, distribution incentive, and industry growth? And the final one, which segment will drive the next phase of growth, protection, retirement, or wealth creation? To discuss this, I am joined by very special guest today, Rushabh Gandhi, Managing Director and CEO of India First Life Insurance. Rushabh sir, welcome to Insurance Mantra.
Thank you. Thank you so much, Anurag.
Sir, I just want to start with you that it's often debated across in all the seminars that India's insurance penetration is much below the global average. If we talk about countries like US, Canada, we are much below the global average. So, as per your experience, how should we should view the insurance penetration, or there can be another parameter also to view the insurance number, and going ahead how it will change?
Thank you. Thank you so much, Anurag, for the question. See, first and foremost, it's important, for the audience to understand, how insurance penetration is calculated, right? So in the Indian context, typically it is a function of the premiums that we collect divided by the GDP of the country.
Yes, sir.
Correct? My very, very candid view, on this is that this is one of the ways of calculating insurance penetration, not the only way. In fact, in my mind, if the maximum number of families in India had adequate protection, insurance penetration would be good. Having said which, obviously there are lots to learn from, some of the other mature markets. So India is typically at a life insurance penetration is at a 2.7. Some of the other markets are at a 7.
And it decreased also in last 1 year.
It's decreasing thanks to the GDP actually increasing, right?
Okay.
Otherwise, the premium collection is pretty good. And markets like the US and the UK and France are actually in double digits. So I think one of the biggest learnings from some of these countries who have insurance penetration in the double digits, in my mind, is making life insurance part of the overall individual's financial journey.
Okay.
Which effectively means that life insurance should not be looked at as a standalone product, but it should be looked at as part of a bouquet. It is not about, whether I need life insurance. It is just about how much do I want to allocate towards life insurance. And I think if every Indian has this mindset, half of our penetration problems will automatically get solved.
Yes, sir. So, sir, when we were discussing about what we can learn from other markets like USA, France, Canada, and the penetration is also, it's a right number to look upon, or number of policies, or there can be some another parameter also which should also be considered while measuring insurance reach.
So like I said a few moments back, Anurag, the way insurance is currently calculated, insurance penetration is only one of the, ways you should actually look at it. One of the other ways which I personally love is, what percent of the families are adequately protected.
Okay.
And that's a very simplistic way of looking at it. But at the same time, if a family is protected, it does have insurance cover, then the problems pretty much has been solved.
Okay. So, in India's context, what are the challenges? Is awareness, affordability, reach, distribution? What are the challenges as per your experience of so many decades?
So see, we must remember that, 2/3 of India is actually residing in rural India, correct? And there, while a little bit of whatever you mentioned is a problem, but I think the primary issue is around accessibility.
Okay.
This is because a product which gets sold in a metro, will not necessarily, find a place in rural India. The average case size will be substantially smaller. And more importantly, it's going to be extremely difficult for distribution to reach every nook and corner of the country without incurring higher costs. So now you have this, strange situation, right? That the policy size is substantially lower and the cost of reaching rural India is substantially higher. And the only solution to this is using technology. Now the good news. The good news is that, from whatever I saw last, approximately 100 crore Indians are already using internet, and more than 50% of them actually reside in rural India. So obviously, rural India is embracing technology. So I think technology-led innovation, which will help us reach out to every nook and corner of the country, and then insurance companies taking that step forward and offering actually bite-sized, really small, easy to sell, easy to understand insurance products is what will actually boost demand in rural India. I've said this time and over again, Anurag, and I'll say it one more time. The next phase of growth for the insurance industry will actually come from rural India, not from urban India.
Okay. Sir, you spoke about the challenges, accessibility, and there is a lot of scope in rural India, but bank branches are there in every nook and corner. So how bancassurance can play important role in reach of insurance, especially in rural India?
See, bancassurance is a very dominant, distribution channel today. And, it will continue to play a very critical role in reaching out to a goal of insurance for all by 2047. You're absolutely right that, branches are there in every, nook and corner of the country, and they will continue supporting our cause. Having said which, right, so we are owned by, one of the largest banks in India, right, which is Bank of Baroda. And we have multiple interactions with, the folks at Bank of Baroda. And you'll be surprised, Anurag, that a branch manager in a typical bank, has over 30 KPIs. Okay, so he has effectively 30 different things to do. Life insurance is one of them. So yes, banks will play a very critical role in ensuring that insurance for all actually happens by 2047, but all the distribution channels will have to fire.
And sir, do you think that there are few challenges also in banca-led distribution and mis-selling is one of them?
No, I don't think so at all. In fact, I think, it's been, spoken about a lot more than what it should have. I can talk for our life insurance company, and I'm sure, many other life insurance companies will have similar data points. But our mis-selling ratios, our grievance ratios are substantially lower in bancassurance vis-a-vis some of the other distribution channels. I think, the channel is not important. What is more important is the fact that is the person who's representing the insurer, giving the right advice, to the consumer. And that could happen through bancassurance, it could happen through the individual agent, it could happen through the broking fraternity. As long as the advice is right and sound, mis-selling will not happen. But again, data point, at least for India First Life, our grievance ratios and mis-selling ratios for bancassurance substantially lower vis-a-vis the other channels.
And sir, something will change because there is a mandate by RBI also, which will be effective from 1st January 2027. So how banca model will change after 1st January 2027?
We'll have to wait and watch. In my mind, given that insurance for all is a key deliverable, by literally everybody from practitioners, to regulators, to policymakers, I don't see any dramatic changes kicking in. Let me put it this way, that insurance for all without bancassurance is going to be extremely difficult. Extremely difficult.
And sir, your views on open architecture or mandatory open architecture in banca channel?
So, mandatory open architecture, I don't think is a great option. Today banks have an option of adding multiple life insurers depending on the need. So if a bank feels that the entire product suite is not available, from let's say a single insurance manufacturer, then they have the opportunity to actually add in multiple. Making it mandatory is like almost is avoidable.
It's avoidable.
It's avoidable.
Okay. What would be your suggestion or your advice where all the channel partners and the part of the ecosystem like distributors, insurance companies, policy holders, all of them can be benefited? What if a regulator is asking you to give 3 suggestions, what will you suggest?
So I'll give you one suggestion because I feel very strongly about it. See, insurance by definition is a long-term product, right? And if a customer, sticks on with the product for what he had actually contracted, maybe 15 years, 20 years, in certain instances 10 years, then all the stakeholders are bound to benefit. Whether it's a distributor, whether it's a manufacturer, whether it's a customer. So I don't think I would link commission to effort or
Persistency also not.
I would. So so to a channel or to effort or to even products which I said some time back. But I would not change the commission structure per se, but I would restructure the commission structure, which effectively means that today a lot of it is front loaded.
So staggered.
I would stagger it, absolutely. And I think that would solve all problems. Customer benefits because, you have an advisor, whether it's a bank employee or whether it's an individual agent or a broker or anybody else who walks with him through his policy life. The insurance company benefits because the persistency actually kind of ups its ante. And the distributor also benefits because, instead of getting his commission upfront, he's actually getting his commission over a longer period of time. So I think this is a solution which I think will benefit pretty much everybody.
So sir, your view that pure protection term insurance product and credit life product should have same amount of commission, or there should be some differentiation?
See, you asked about effort, right? So if you just look at it as a standalone product, clearly it's an easier product to sell.
The credit life.
Credit life as well as, let's say pure protection, right? Having said which, if there's a channel who's actually going to walk with you through the policy term, which means that, if let's say you paid off your loan early, and you want to kind of surrender your credit life policy, he's going to help you do that. In a term policy, he'll remind you consistently when the premium is due, make sure that the premium is paid on time, make sure that after 7 years your policy does not lapse, and so on and so forth. So the effort effectively is more to do with what an agent actually brings onto the table than to a product per se. Having said which, if you just look at it from the naked eye, clearly that is an easier product, but I would still look at it holistically. And
so
because
you will compare both equally only.
Exactly, and which is why the solution.
But sir, there are many experts, even in IRD also, they are of view that a credit life product, which doesn't require much of effort, and somebody who is buying a loan or going for a loan and he's getting it with loan only, and the bank is not offering any differential interest rate also. So it shouldn't be compared with a pure protection product.
So it's very interesting. In Bank of Baroda, we actually offer a differential interest rate.
Okay.
Because the risk to that extent is mitigated.
Okay, so rate of interest is
the
different?
rate of interest is marginally lower if a customer takes a housing loan along with a life insurance wraparound.
Okay.
So it's interesting, how things will pan out, but like
so marginally 5-10 basis point.
Like 0.05. Like
okay.
if it's let's say 7.5, it will be 7.45 and in the whereabouts. And again, it differs from product to product, from housing loan to.
But that is there.
But it is there, and I think it's important for people to realize that yes, it is a risk mitigation product. Tomorrow if something were to happen to the customer, today we would actually pay off that loan, which would otherwise become an NPA. So there is a strong reason for the risk mitigation to actually be in existence.
Sir, so going ahead in next 5 to 7 years, which products will see the highest growth? ULIP, pure protection, or any other product, endowment product you think that will pick up? And do you agree that still the pure protection term insurance share is very less and all insurance companies need to focus on that?
So the conventional answer to your question would be protection, clearly, and
So protection will lead the growth.
so I'll just complete my thought process. See, most people will say protection, and I strongly agree with that, because today protection is for most companies in the single digits. Vis-a-vis the entire premium suite that they actually collect. Having said which, we have to acknowledge, Anurag, that there is a fairly profound demographic transition which is happening in this country, right? So by 2050, over 20% of the Indians will be senior citizens.
Senior citizen.
In fact, the number of senior citizens are going to be higher than the number of children that actually will exist in the Indian context. Now marry this with the fact that today most Indians have planned for about 15 years of retirement, while the reality is that they need to plan for maybe 20 or 25 because of longevity. So I think this thing that we actually call the silver economy, I think is a very, very big opportunity.
You're hinting toward the annuity product which cannot be offered only with life insurance.
I think pensions and annuities along with protection. See, at the end of the day, why is insurance important, right? There's a risk of dying too young or the risk of living too old, right? So risk of dying too young ke liye protection, risk of living too old ke liye annuity. So I think it will be a cross between protection and annuity which will drive the next phase of growth.
And sir, help us understand with your experience with the Pradhan Mantri Jeevan Jyoti Bima Yojana, because the most affordable product which most of the insurance companies are offering, but you are also leading in that. How is the claim experience? How many lives are benefited through this product?
Actually, thank you so much, Anurag, for asking this question, because if you ask me, PMJJBY, Pradhan Mantri Jeevan Jyoti Bima Yojana, is one of the biggest financial inclusion successes, in insurance. We've got about 23 crore members. So 23 crore people have actually a PMJJBY product. Interestingly, more than half of them are women, and over 70% of them are in rural India. So it ticks off two of the other boxes also. And we've paid close to 1 million claims. When I'm talking about I'm talking about the industry at large. So obviously 1 million families actually have benefited from this product.
1 million?
1 million, close to 1 million claims have been paid. So I think, like I said, one of the biggest financial inclusion successes, in life insurance.
So do you think that premium should be revised in this, or?
I think we finally found a sweet spot. So we've been running this scheme for over a decade now, since it actually started. And, I'm being candid enough to admit that in the first few years, we actually, were in the red as far as this product was concerned. I think finally we have arrived at a sweet spot in terms of premiums, wherein, the customer benefits, the insurance companies, have their, nose above the water level, and, financial inclusion is happening. So I think we should not tinker with it too much. We found the sweet spot.
Okay, sir. So now I'll move to our rapid fire segment, and sir, you have to answer my questions spontaneously. Shall I start?
Please do.
Okay, sir. The first question: life insurance today is still sold more or than it is bought?
It is more bought today than it was bought yesterday.
Okay. If IRDA granted you one wish tomorrow, what would you ask for? One wish, sir. There are so many wishes.
So, however bizarre it may sound, Anurag, but every Indian who is filing income tax return should have a mandatory life insurance policy.
Okay. One insurance regulation you believe has changed the industry for the better.
Privatization.
Are commissions unfairly criticized, or do they genuinely need a rethink?
They need a restructure.
Bancassurance, the biggest strength of life insurance or over-dependence?
Undoubtedly the biggest strength.
One global insurance practice you wish India would adopt immediately?
Select individual agents should be allowed to sell products of multiple insurers.
Open architecture. One term insurance or ULIP, which product do Indians misunderstand the most?
Neither. The onus is on the seller.
If you had to convince every Indian to buy life insurance in one sentence, what would you say?
जिम्मेदारियां हमसे बांटिए हल्का लगेगा, which interestingly is also our tagline.
Okay. What's the biggest challenge today? Affordability, awareness, or customer trust?
I think it's a cross between accessibility and customer trust.
If you were not in insurance, which industry would you have loved to lead?
Anything else in the financial services space.
Okay. One myth about life insurance you wish would disappear forever?
Slightly longish answer, but see, most people believe life insurance is an extremely long-term product. Okay, but in my mind, it's a myth because one starts feeling lighter the minute one signs on the contract. So while the financial need gets fulfilled maybe 15-20 years down the line, the psychological need gets met immediately. So I would debate that some of the benefits of life insurance kick in almost instantly.
Okay. Final one, sir. One word that describes the future of India's life insurance industry.
Bright, very bright.
Okay, sir. Thank you so much, sir, for joining Insurance Mantra and sharing your views, sir. It's a pleasure talking to you.
Thank you, Anurag. It was a pleasure.
That's a wrap on this edition of Insurance Mantra, but we'll leave you with our insurance basic. Did you know? Did you know that Pradhan Mantri Jeevan Jyoti Bima Yojana or PMJJBY is one of the India's most affordable life insurance scheme for just 436 rupees a year? That's about 1 rupees 20 paisa per day. You get a life insurance coverage of 2 lakh rupees. Anyone between 18 and 50 years with a bank or post office saving account can enroll it and till the age of 55. This policy is renewed every year with coverage from 1st June to 31st May, and the premium is auto-debited from your account. A small premium today can provide big financial support to your family. So stay informed, stay protected. That's our insurance mantra.